Hey there, traders! If you've ever wondered who the real movers and shakers are in the Forex market, you're in the right place. Today, we're going to break down the key players in the Forex market, the ones who really make things happen. Whether you're a beginner just dipping your toes into Forex or a seasoned trader looking to refine your strategy, understanding who's behind the big moves can give you an edge. So, let's dive in. Let's start with the heavyweights. Central banks. These are the guys with the power to move markets like no one else. Central banks like the Federal Reserve in the US or the European Central Bank control their country's monetary policy. They're the ones who decide if interest rates go up, down, or stay the same. And believe me, when they make a decision, the market listens. Why do they matter so much? Well, because their decisions impact the value of a country's currency. If a central bank raises interest rates, that currency typically strengthens because higher rates attract more investors. On the flip side, if they cut rates, the currency might weaken. And it's not just about interest rates. Central banks also engage in something called open market operations, where they buy or sell government bonds to influence the money supply. When a central bank makes a move, whether it's an interest rate change or a major policy shift, you can bet the Forex market will react, and often with big, fast moves. That's why it's crucial to keep an eye on central bank announcements and meetings. Next up, we have commercial banks. These guys are like the engines that keep the Forex market running day in and day out. Think of banks like JP Morgan Chase, Citibank, or HSBC. They're involved in the Forex market in a big way, handling the bulk of daily trading volume. So, what do? Commercial banks don't just facilitate trades for their clients, like companies or governments. They also trade for their own profit. They're known as market makers because they, quote, buy and sell prices for currencies, providing liquidity to the market. Without these banks, the market would be a lot less liquid, and trading would be much more difficult. When you place a trade, it's often matched by one of these big banks, which is why their role is so critical. They ensure there's always a market for buyers and sellers. But remember, these banks are also in it to make money, so they're not just passively facilitating trades, they're actively seeking to profit from the spread between the bid and ask prices. Now, let's talk about hedge funds and investment managers. These are the big players with even bigger money. Hedge funds, in particular, are known for taking massive positions in currencies, often betting on big moves. They're not just buying and selling currencies like you and me. They're executing complex strategies that can involve dozens of different trades, all designed to make money regardless of whether the market goes up or down. Investment managers, on the other hand, are usually managing money for pensions, endowments, or wealthy individuals. They might be trading currencies as part of a larger portfolio to hedge against risks or to try to enhance returns. Both of these groups can move markets because of the sheer size of the positions they take. When a hedge fund decides to go all in on a currency, it can cause a ripple effect across the market, especially if other traders start to follow their lead. Let's not forget about corporations. While they might not trade as frequently as banks or hedge funds, their trades are still significant. Why? Because they're tied to the real economy. Think about a company like Apple, which sells products all over the world. They need to exchange dollars for euros, yen, or any other currency depending on where they're doing business. Corporations enter the Forex market to hedge against currency risk. For example, if Apple knows it will need to pay suppliers in euros 3 months from now, it might lock in an exchange rate today to avoid the risk of the dollar weakening in the meantime. These trades can be large, and when many corporations are making similar moves, it can have a noticeable impact on the market. But here's the thing. Corporate trades are usually more predictable because they're based on actual business needs rather than speculative bets. That's why many traders try to keep an eye on corporate activity, especially in industries like oil, technology, or manufacturing, where global transactions are a daily occurrence. Last but certainly not least, we have retail traders, people just like you and me. Now, in the grand scheme of things, we're small fish in a very big pond, but collectively, retail traders represent a growing force in the Forex market. Thanks to the rise of online trading platforms, it's easier than ever to jump into Forex trading from the comfort of your own home. Retail traders typically trade in smaller amounts compared to the big players we've talked about. But that doesn't mean we're not important. In fact, because there are so many retail traders, our collective buying and selling can add up. And let's not forget that many retail traders use leverage, which allows us to control larger positions with a smaller amount of capital. This leverage can amplify our impact on the market, especially during times of high volatility. One thing to keep in mind as a retail trader is that the Forex market is decentralized. That means we're often trading against big banks or hedge funds, not directly with another retail trader. So, while it's great to think big, it's also important to stay informed and understand that we're playing in the same arena as the big guys. So there you have it. A rundown of the main players in the Forex market. From the powerhouse central banks to the nimble retail traders, each group plays a unique role in keeping the Forex market dynamic and constantly moving. Understanding who these players are and what drives them can help you better anticipate market moves and refine your trading strategy. Remember, in Forex trading, knowledge is power. The more you know about who's moving the market, the better equipped you'll be to make informed decisions and, hopefully, profitable trades. If you found this video helpful, don't forget to hit that like button, subscribe, and share it with your fellow traders. Thanks for watching, and as always, happy trading.